On Sunday, Treasury Secretary Tim Geithner said Republican leaders have assured the White House they are prepared to lift the debt ceiling. Geithner said disruptions to capital markets and a potential credit default will be avoided. Our next guest agrees, but says there will be a fight. Dean Baker is with us now. He is the co-director at the Center for Economic Policy and Research. It's a think tank funded mostly by grants from foundations. Dean, thanks so much for joining us this morning. First of all, this question of timing. I mean, some people say May 16th, this deadline is not achievable. Late June is the earliest possible target. What are you hearing in D.C. about timing?
Well, I would be surprised if they actually have it done by May 16th. I think the way to think about it is that if they're still throwing chairs at each other May 16th when, we're expected to first run up against the debt ceiling, that would be a problem. But if the idea is that they pretty much have an agreement, they're working out the details, then not hitting May 16th won't be any big deal. If you look back at the budget agreement signed last Friday, they agreed to that, of course, the prior Friday. They didn't have the details worked out, but that, at that point they said, okay, we're basically there. We just have to put everything down on paper. If we're at a situation like that on May 16th, then that won't be any big issue.
So, Dean, I mean, we have to ask, because we're always watching the markets, but will a deal be struck? You just hit that, though. How would interest rates react if we don't hit this deadline in May?
Well, if they're throwing chairs at each other, in other words, they're still very much at odds, and people really think it's plausible they won't come to an agreement. Not that it's likely, but it's at least possible. Then undoubtedly interest rates will rise, and possibly quite a bit. Again, it's really hard to imagine the U.S. defaulting on the debt. I mean, that would just wipe out the financial sector as we know it, a huge hit to the economy. It's really, really hard to imagine that. So you're with the Treasury Secretary Tim Geithner saying it's not going to happen. Yeah, I mean, it's really, but, if we hit the deadline and the two sides are still very far apart, the markets have to say, well, this is at least a possibility. It's not likely. No one's going to be betting it's likely. Everyone's still going to assume they'll reach a deal. But if you get to that deadline and they're still very far apart, then you have to say it's not impossible. Dean,
I mean, you mentioned the chairs flying. It begs the question, I mean, just how far can both parties go with this brinksmanship, right?
Yeah, and, I think at the end of the day, as Secretary Geithner is right. They will come to a deal, and I think both sides know it's not really to their benefit to get too carried away with the histrionics. So I really doubt come May 16th they'll be that far apart.
All right, now, Paul Ryan said this weekend Republicans want financial controls and cuts in spending. This is obviously with the idea of raising the limit in mind. But you say cutting spending equals cutting jobs. What is your logic on that?
Well, there's 2 points here. One is simply the short term. Government spending is the source of spending and jobs in the economy, just like when you or I spend money or businesses spend money. If we cut that back, we have a badly depressed economy, something everyone should keep in mind, 25 million unemployed, underemployed, or out of work or out of the labor force altogether. When we cut back spending, that means fewer jobs. In other circumstances, you could talk about the private sector filling the gap, but you can't really say that today. It's not as though interest rates are going to fall and there's going to be this big spurt of job growth in the private sector. We've tested that. It doesn't work.
So you're saying if government jobs then are cut, spending will be cut?
Well, that's right. That's right. There's no plausible story you could say, and there's a lot of research on this, there's no plausible story that the private sector will fill the gap. Now, over the long term, you have to ask, what is it that the Republicans want cut? Do they want to cut Medicare? Well, Representative Ryan's actually said that, but the public, I don't think, is behind him. I don't even think the Republican voters are behind him on that.
But in the case, is government spending, Dean, really the best way? I mean, I heard what you said. The private sector can't make it up all, but is government spending the most efficient way to create jobs, I guess is my question.
Well, in the short term, yes, because we don't have an alternative. I mean, if we had the private sector jump in there and create millions of jobs, that would be wonderful. But I can't tell that story, nor can anyone else. It's just not plausible. Down the road, if we're back to sort of, 4.5%, 5% unemployment, then you could sort of tell that story. You can't today when you have 25 million people out of work.
You mentioned the health care costs, and you feel like this should be the focus and basically the one thing on the table that both parties should agree on.
Well, healthcare costs at the end of the day are what drives these huge deficit projections. And Representative Ryan, it's sort of, I don't know if you want to call it humorous, but interesting. His proposal basically saves the government deficit by increasing costs in the private sector by over $30 trillion over Medicare's 75-year projection period. That's 6 times the projected shortfall for Social Security. So it saves the government budget, but at the point of bankrupting the rest of the economy.
Dean, we thank you so much for your time, for your insight. Dean Baker joining us. He is the co-director of the Center for Economic and Policy Research, a think tank. He was just joining us there from Washington.